All right, guys, this will be part six to the Bitcoin FUD series. And right now I'm looking at an article from CNN titled Bitcoin versus History's Biggest Bubbles. They Never End Well. This article, it's making a comparison between the Bitcoin uh, asset and the Tulip Mania. If you guys aren't familiar with the Tulip Mania, it was a time in, I think, Dutch history, where in 1700s, I want to say, where, for whatever reason, there was a major rise in price among tulips, um, and it was on the back of financing through credit to pump up a bubble in this essentially flower market or tulip market, and obviously that was a real bubble with disastrous consequences for anybody who tried to store their wealth in tulips. A lot of people lost their life savings, and there's kind of similar trends. You have people who had the same type of mentality around Pokemon cards or Beanie Babies. If you were a kid born in the 90s, you know what I'm talking about. But, I doubt it's a little bit different because it didn't really have the same craze and euphoria as I think was during the Tulip Mania. People generally didn't put their whole life savings in Pokemon cards or Beanie Babies. But but to draw the comparison between tulips and Bitcoin it's one of those. This is probably the worst piece of FUD that I'm going to address in this series, just because it's it. If someone makes this argument, it demonstrates that they don't even understand what they're talking about. They don't even know what a bubble is, because Bitcoin is not a bubble. It's quite the opposite of a bubble, and you know it. It's one of those situations where if I hear somebody say this, it kind of begs into question everything else that they say after that. I can kind of make the case a little bit more clearly. Go over to this Glassnode chart, and here you can see addresses with balance zero point 0.1, 1, 10, 100, 1K, 10K. If we go, to addresses with a balance of 10K, you can see that since 2017, or roughly this capitulation here, um, you know, there's been a very clear trend established of larger whales distributing to the market, and it's interesting that that happened here, right? So you see the decline in addresses. Um, it hits among these 10K people. It hits after this capitulation, which when we're looking at a macro chart like this, it doesn't look that significant. Um, but if you were trading at the time, you remember how significant that time was. Um, you can see here, right? Here's a better view of it. So you have this capitulation event. Price cuts in half by 50% in roughly a week or even several days. And you can see that the number of addresses declined after the capitulation. So that's kind of contrary to what people think. People tend to think that that this move was orchestrated by large whales or large players, but you can kind of see here that it's not what's being shown in the on-chain data, and what you see them reacting to this capitulation, and ultimately, you know, looks like a distribution at the bottom to the market, which is very contrary to the arguments people make, or narratives that sound good about whales accumulating and that type of thing. If you go to the balances with over 100 Bitcoin, you can see the same trend. I have to go back a little bit on this time scale, just because I kind of threw that off a little bit. But let's go here, go to just some random date in March. So you can see this is, you can also see here, this is summer of 2019. So you can see how, essentially, or actually, I'm sorry, this is December 2019. You can see how, apologies, that's the top of the prior cycle peak, January 18th. You can see there also, you see this trend in distribution um, from these. entities with an address of balance greater than 100, and you can go down and you can see that on the addresses with a balance of less than 10. So you can see it here. That trend hasn't really established until more recently, but here you can kind of see that you know after price broke all-time high, balances with 10 Bitcoin or more started distributing on the market, and and that's contrary to the narrative people are saying about whales accumulating more and more percentage of the Bitcoin market. It's just not true. And if you look at the on-chain metrics, it shows that very clearly. People with Bitcoin, and it makes sense that the balances with 10 Bitcoin or more would start distributing that pattern later, right? Because we didn't see that distribution pattern until December 2020, whereas on some of the addresses with more than 100 or 10,000 Bitcoin, we saw that little further back at the top of the last cycle. And essentially that makes sense because um, as the now at these levels, now 10 Bitcoin is significant and still not a crazy number. That's more of your average person level of wealth. So it's not a huge shocker that as price rises up here, and that they might start taking profit and distributing in the market to you know maybe pay down their mortgage or pay off their car loan or pay off their student debt or plan a vacation that they've always wanted to plan, or generally just um, consolidate the profits that they've made. So that's not a huge shocker. I'm interested to see if you see the same pattern on the. Yeah, you see probably a similar pattern, but again, this is one of those where as you move down in the on the balance size, you the patterns take longer and longer to play out. Essentially, you'll probably see the same pattern of distribution for addresses north of 1 Bitcoin distribute as price reaches higher levels, and the significance of 1 Bitcoin becomes greater than it is currently. Where you get to the point where 1 Bitcoin is life changing money. Um, an interesting thing is that here, with if you go to the addresses with a balance greater than 1K, you see a similar distribution pattern, where price hits these highs and then they start, uh, you know, uh, selling to the market. But you don't see that trend of distribution that you see in 10K, right? This is, well, if we go back, and the addresses north of 10K, right, they had if you were to graph them after the peak of 2017, they've had a clear downtrend ever since. And we don't see that in addresses north of 1K. And it's a little bit of an outlier in that sense. And so I just want to talk about that. I think personally, the addresses with balance north of 1K reflects institutional involvement, and you can see here how institutional, these addresses have had a clear uptrend. Um, in direct inverse proportion to addresses with balance north of 10K. And that's very interesting. So I think what you see there is the transfer of coins from after the 2017 cycle from some of the OG Bitcoin holders who were in very early and had huge balances, transferred to institutional clients and organizations. Now, there's no way to prove that. It's totally speculation, but that's just my interpretation of the data. And I think this adds a little bit more weight to it. So I'll zoom in on this price action, but you see this massive spike here uh, in addresses north of balances north of 1,000, and you see a spike on February 28th of roughly 100. It goes from um, 21 2100 to 2200 in a day, right? So that's a pretty significant jump relative to other price jumps. It may be the highest jump these addresses have shown in the last few years. And I don't want to get into conspiracies, or different narratives, but I do find it interesting that it came out right before. You see this spike right before Biden issued his executive order, on cryptocurrencies. I think it came out March 8th. So roughly the spike came out a week before, which is typically, you know, people, big players are typically tipped off on news events prior to the general public. They just have connections and friends, so they get these type of news events coming down the pipeline before the mainstream media publishes something. And so I just think this probably isn't a coincidence here. Probably a lot of you had a number of institutions who had capital on the sidelines and were just waiting for the green light from the regulating bodies that they were, there wouldn't be unfavorable legislation coming. Anyway, just to go back to the story that we opened with, Bitcoin is a bubble. This is one of those FUD pieces it's just hard to address because it is, in one sense, it's one of the worst pieces of FUD that keeps popping up because it's so untrue. But in another sense, it's one of the hardest to attack or strike down because there's not even a little shred of truth to it. There's like no attack vector that you can attack it from. It's just completely um, made up, really. I mean, it's just a demonstration that people, these journalists publishing these stories, just aren't doing their due diligence. Um, anyway, this hope you like the video. I'll be posting the seventh update to the Bitcoin FUD series soon. If you like this type of content, just like the video, subscribe to the channel, and catch you in the next one.